We're seeing some, encouraging resilience in the American economy.
Yeah.
This is an economy that's resilient. We believe that, and it's resilient because of the president's work, because of the president's economic plan.
We're really seeing some progress, moving in the right direction.
The United States is better positioned than any other nation, any other major nation in the world, to lead the world economy in the 21st century.
It's all just peaches and cream, according to Joe and his team. But what's the truth? Now, according to the Federal Reserve Bank of St. Louis, the personal savings of Americans are roughly 1/8 of what they were right before the pandemic. That's the lowest level of savings since the 2008 recession. And Americans are up to their ears in debt as well. They owe $925 billion to credit card companies. That's a 15% year-over-year rise. That's the biggest jump we've seen in more than 2 decades. And now, the layoffs are coming. Amazon plans to fire more than 10,000 workers, while Meta will axe another 11,000. DoorDash is cutting 1,200, and media companies like AMC are slashing 20% of their workforce. So is all this a sign of a healthy economy? Joining me now is Peter Schiff, Chief Economist and Global Strategist for Euro-Pacific Capital, host of the Peter Schiff Show podcast, and Robert Wolf, former UBS America's CEO and Fox News contributor. Robert, you see a bright side here. What is it?
I would say I see a brighter side. I mean, this is nothing like the 2008 recession. I was at the Lehman crisis that weekend, and there was leverage throughout the system with banks and everywhere else. We're not seeing that. The labor market is stronger than what you just depicted. We're going to see north of 200,000 job gains tomorrow. Inflation has subsided a bit, although I'm still very nervous about a long tail. Consumer spending has been strong, and GDP came in very strong yesterday. So, I would say I'm nervous about inflation, but I don't see the hard landing like Peter sees, although the inverted yield curve is probably telling him he's right.
Peter, without getting too wonky about inverted yield curves, do you agree with this fairly positive assessment?
Well, I agree in a way. It's not like the 2008 recession or financial crisis. It's actually going to be much worse than that. This is just the beginning. I think we've been in a stealth recession all year, but I think the recession is going to get much worse in 2023. But what's also going to get a lot worse is inflation, because one thing that's kept the lid on consumer prices in 2022 has been the strength of the dollar. But I think the dollar has lost that strength. It had the worst month in 12 years in November. It's off to a horrible start in December. I think we're going to have a currency crisis in 2023, and that's going to fuel the inflation fire just as the unemployment rate is really spiking and this recession is kicking into a higher gear.
Well, Robert, the problem here is that we also have a lot of consumer pessimism out there. And after we've blown through the Strategic Petroleum Reserve, we've kind of out of ideas about energy prices. When the energy prices continue to rise and the sanctions, Russian sanctions, are obviously kicking in, where does that leave us? Because costs are continuing to go up.
I mean, Laura, you're right. I'm very nervous about energy prices. Obviously, I think we should buy in the open market as needed to re-put oil into the Strategic Petroleum Reserve. But we've had the perfect storm. We've had like the embargo of the early 80s with Russia. We've had the Persian Gulf type crisis of 92, and then we've had the post-recession demand of 08. So we've had the perfect storm between the Ukraine and post-COVID. So I'm not bullish at all on energy prices staying low. I actually think into the winter months it's going to be a bit tough, especially in Eastern Europe. I think that being said, I've recommended that we rid the federal sales gas tax and rid state sales gas tax. Let's put money right back in the consumers where it's being hurt the most, which I actually think Putin is a major issue of why gases have gone so up.
Oh, well, we keep wanting to prolong this war by spending an enormous amount of money on munitions to Ukraine as well. That's not making it any better. Well, Peter, Treasury Secretary Janet Yellen was asked about what was causing this record high inflation last night, and this was her answer.
Remember, everybody stopped spending on services. They were in their homes for a year or more. They wanted to buy grills and office furniture. They were working from home. They suddenly started splurging on goods.
Okay, so this is the consumers' recession or inflation, I should say, Peter? I never quite have heard anything like that before.
Well, what Janet Yellen is overlooking is just where did all these consumers sitting at home get all this money to buy all that stuff? They got the money from the U.S. government that flooded the economy with PPP money and unemployment benefits that in many cases were 2 to 3 times what people earned when they actually had jobs. And so the government made it possible for the unemployed to sit at home and keep spending money as if they still had jobs and were productive members of society. So the inflation was created by government. And, tax cuts are not the answer right now, unfortunately, because we just substitute inflation for taxation. What we actually need is big cuts in government spending. And unfortunately, we're not getting that. We're getting more government spending.
No, we're going to get the omnibus bill thanks to Republicans. So, gentlemen, great to see you.